Welcome, everyone, to the Information's TITV. My name is Rocket Drew. It is Tuesday, July 7th. First up, the Information has exclusive reporting on the major investors backing a new company that's buying traditional businesses and transforming them with AI. We'll break down what it means with our VC reporter who got that scoop. And our Asia Bureau also has an exclusive. Chinese AI lab Zhipu is exploring developing its own custom AI chip as demand surges for its models. We'll hear from the team behind that story. Plus, we'll talk about Walmart's new positioning as an advertising giant. And I'll wrap the show with a conversation with Max Tegmark, an MIT professor and chair of the Future of Life Institute. His organization published a new report today that grades AI companies based on their safety practices. It's going to be a great show, so let's get right into it. For years, investors have poured billions of dollars into the companies building AI. But now, some of those same investors are making a different bet, using AI to reinvent traditional businesses. The Information's venture capital reporter, Julia Hornstein, has exclusive reporting that SoftBank, Altimeter, and D1 are investing in a $2 billion financing round from Thrive Holdings, which is an offshoot of Thrive Capital. It buys controlling stakes in firms and transforms them with AI. Julia joins me now to explain all of this. Julia, welcome on the show.
Thanks for having me.
I'm really excited to hear exactly what is going on with this arrangement. So let's start with what exactly is Thrive Holdings?
So Thrive Holdings is a one-year-old holding company started by Josh Kushner's Thrive. And what that means is it's pretty different from a traditional venture firm because instead of investing in high-growth tech companies, Thrive Holdings buys controlling stakes in services firms like accounting and IT companies, and it aims to transform them or make them more efficient using AI tools. It's set up like a permanent capital vehicle, which basically means that its investors can invest out of the holding company over a longer time horizon as opposed to the traditional 10-year fund cycle typical of a venture firm. And as you said, it's currently raising $2 billion, and traditional venture investors / hedge funds, including SoftBank, Altimeter, and D1 Capital Partners, are participating in that financing.
It's intended to pay out over longer timescales than 10 years. What's the reasoning behind that?
And not necessarily intended to pay out over longer than 10 years, but that investors can keep investing out of the same, structure for over 10 years versus in venture, there's like a traditional, you have like a fund one and you can only invest out of that, for a certain amount of time, depending on how much money your LPs gave you. And you're intended to, give a return within a decade or so.
I see. Okay, got it. So they buy up companies and they roll up smaller businesses. Why do that? What's the strategy here?
Yeah, so they target these, companies. They take a meaningful stake in those companies, and those companies then buy up smaller services businesses. And the goal, as you said earlier, is to aggressively modernize these companies by injecting proprietary AI tools into their workflows. For example, Thrive and OpenAI collaborated on a Codex tax agent that works with one of the companies that Thrive Holdings owns a stake in. So I guess the thinking here is that they can spin up these AI tools that make these businesses much more efficient.
And you wrote that they're doing a lot of this work with accounting and IT firms. Why those industries?
Yeah, so I guess for context, Thrive Holdings has already backed Current, which is an accounting firm, and Shield Technology Partners, which is an IT provider. Thrive must believe that these sectors have a ton of repeatable manual workflows that are ripe for AI automation. So investing in and modernizing these industries also gives Thrive a slice of the business outcomes from its major investment in OpenAI. Its venture arm, Thrive Capital, is a major investor there, and presumably gives the other investors in this round, SoftBank, Altimeter, and D1, a slice of those outcomes as well.
So accounting and IT, I mean, these are not what I think of as the hot AI sectors. Are they basically betting that value is going to accrue to these more traditional, almost boring companies instead of model makers or startups that are developing cutting edge AI applications?
Yeah, I mean, it's a bet that value lies in the application of traditional cash flowing business models. It gives these major AI investors like SoftBank another diversified avenue to profit from increased enterprise spending on the technology. Rather than replacing model makers, it's pretty reliant on them to invigorate these so-called boring but highly profitable industries.
So you mentioned Codex playing a role here, which is OpenAI's coding agent. How is OpenAI involved in this arrangement? I almost would expect OpenAI to just try to automate accounting and IT itself. That's sort of part of the nature of the SaaS apocalypse fears, I guess.
Yeah, maybe. I mean, OpenAI took a stake of an unknown size in Thrive Holdings late last year. They also share talent from their research, engineering, and product teams with the holding company. OpenAI's head of applied research also joined Thrive in a sort of joint role. And as I mentioned earlier, the two firms co-built this text processing agent using Codex. And the partnership just, allows OpenAI to embed its tech deeply into enterprise workflows without having to build their own entire services firm from scratch.
Hmm. Okay, makes a lot of sense. If it works for accounting and IT, what industries do you expect them to go for next? I would guess they're not going to be rolling up dentist practices after that.
Maybe. I mean, we'll see. As I reported, Thrive Holdings is already planning to expand into another vertical beyond just accounting and IT. That vertical is unknown for now, but this expansion follows this playbook loosely modeled on massive software conglomerates like Constellation Software, which scales across dozens of traditional sectors like healthcare and construction. So I'd say any service-oriented industry is up for grabs, especially ones with high labor costs and routine workflows.
Got it. Well, it's a really fascinating area right now on the frontier of how people are making these models useful. Forward deployed engineers are such a hot topic right now. So it's interesting to see Thrive getting in this game.
Totally.
All right. Well, thanks so much for coming on and explaining it to us, Julia.
Thanks for having me.
Zhipu AI, the Chinese AI lab behind the highly regarded GLM series of open source AI models, is weighing designing its own AI chip. That's according to the information's exclusive reporting out of our Asia Bureau from our colleagues Channer Liu and Juro Osawa. Jing Yang, our Asia Bureau chief, spoke to Juro about the story. Here is that conversation.
So, Jiro, you and our colleague Chen Liu reported that Chinese AI lab Zhipu is exploring having its own custom AI chip. Could you tell us what you find out?
Yes, so we found out that Zhipu is, thinking about the plan to develop its own custom AI chips for running its own AI models, and they're starting to have some discussions with outside chip design companies in China for potential collaboration.
And why would a AI lab like a Zhipu, a developer of large language models, want to have its own AI chip?
So this is, first of all, part of a broader trend in the whole industry, how to secure the computing capacity for running AI models. That's a big challenge, and that's the same in China. And also demand for, running AI models is, growing really fast, especially for Zhipu. And also in China, there's another factor of the geopolitical factor because U.S. export controls make it much harder for the Chinese companies to access NVIDIA chips for running AI models. So they have to turn to domestic options. And Zhipu already works with Chinese chip companies like Huawei and it's using their chips, but using other companies' chips, it requires some software engineering work, additional work to make sure that its models can run well on those chips. And if they come up with the custom, chips really specifically designed for Zhipu's own models, that is the most efficient way. It's the fastest, cheapest way potentially.
I see. I mean, has anything changed? Why are they doing this now, not later or earlier?
I think one thing is that the demand growth has been very rapid. And this year, they're also kind of shifting their business focus to, selling cloud-based access to AI models, what we call API access. And that business has been growing very rapidly for Zhipu. And the latest model, GLM 5.2, has been very popular in China and also globally. So, there's a question of how they can make sure that those models will have enough chips to run.
What what has been driven the popularity of GLM 5.2?
So a lot of developers describe this as a highly capable model, and some of the benchmarks show, comparable numbers for with Anthropic OpenAI models, and even if they don't quite exactly match those leading models, if they're almost as good, and then the cost is lower, they're more affordable. So developers see this as a capable and also affordable option for coding and other tasks. So that's definitely one reason why Zhipu's new model has been growing very fast. And we talked to some U.S. model aggregator platform, Vercel, for example. They said that the Zhipu 5.2 has been the fastest growing model since it was released in June on Vercel's platform. So definitely there's a lot of traction.
I see. And also, I guess they are a lot more affordable than US models too, right?
Yes. And it's also open source model. And yes, the cost of API is much lower compared to the US models.
Right. And then, we know that there are several, what is sort of the state of play when it comes to the AI model, landscape in China? We have the big tech titans from Alibaba to Tencent to ByteDance that are still, working on in updating their new models, and we also have the smaller upstarts, including Zhipu, including DeepSeek, and Moonshot. What is your sort of feeling when it comes to Zhipu? Like, where is Zhipu in this state of play? In where would you place the company in the competitive landscape?
So a lot of people in China that I talk to, they do describe Zhipu as one of the more research-driven, AI labs that is, in some ways, shares some things in common with DeepSeek. That it's really dedicated to cutting-edge research, and its models. People definitely take those two companies' models very seriously, and they're both, especially Zhipu has been, focusing a lot on coding as well. So. Even though a lot of people in China still do manage to use US coding tools, they also do describe Zhipu as, among the Chinese options, it is seen as the leading coding model. And also for researchers working in China's AI sector, if they were to choose somewhere where they want to do some serious research, they might go to DeepSeek, but also Zhipu. And obviously, the big tech companies you mentioned, they do have a lot of resources, ByteDance and Alibaba especially, with their huge cloud computing services and everything. But if you really want to focus on the projects, DeepSeek and Zhipu do seem to have their own unique kind of lab environments. And Zhipu has been founded by researchers from Tsinghua University, which is also known for their AI research.
I see. And, would you say that the state of play in China will continue to be relatively fragmented compared to the US, where, it seems like the competition has really truly been concentrated on just a handful of players?
I think so for those companies, especially after Zhipu and Minimax, those two companies went public. And at the beginning of this year, and Minimax shares recently did face a lot of pressure for selling, but generally those two IPOs have been very successful. Zhipu's market cap has grown so much compared to the IPO price, and so they have really, really become more established, and I think they're here to stay for sure.
I see. I see. Well, thank you, Drew.
Thank you.
While Walmart is traditionally known as a retail giant, its fast growing advertising business brought in nearly $6.4 billion in fiscal year 2026, outpacing social media platforms like Snap and Pinterest as it positions itself to challenge Amazon's digital ad presence. Joining us now is the Information's Amazon reporter, Catherine Perloff. Welcome on the show, Catherine.
Hi, Rocket.
I thought this was a fascinating story. So, how has Walmart established itself as a player in the ad business?
Yeah, well, Walmart's been in the ad business for about maybe a little bit over a decade, but it's really been growing fast more recently, especially as Walmart's been building out, their e-commerce operations, and their e-commerce growth is tied to their ad growth, especially one segment of their e-commerce business, which is the sort of third-party seller, the marketplace business, which is where um, businesses directly sell on Walmart.com versus the traditional retail model where Walmart would like buy merchandise and then resell it, which is, a strength that Amazon has found with the third party seller marketplace. So executives have said that, the growth of those third party sellers have lifted the app business because it kind of makes sense if you have more different types of products sold on your website, there's more need for advertising. Um, because there's like, a greater need to like find the right product, which ads can help with. Plus, retailers are just becoming more important in the ad market, which we can get more into. So there's that too.
Yeah. Yeah, absolutely. And Walmart has also made some acquisitions recently involving ads. What do those acquisitions tell us about the direction that they're going and what they're thinking about?
Totally. I mean, first of all, these are like the major acquisitions Walmart has done in recent years. So it just shows that like advertising is their focus, and these are both ad companies. So one is Vizio, which is a TV manufacturer. Um, and Walmart, after acquiring Vizio, was able to make Vizio the sort of software for its house brand TVs. And that just gives us a new surface to sell ads. You can sell ads on the home screen of these TVs. Other companies use Vizio software, so it's just a new surface for advertising, especially because TV is a place where people who might not sell that don't sell on Walmart might want to advertise. If you're an insurance company, you might not think about selling on Walmart's website because no one's buying insurance on Walmart, but you might want to catch people when they're watching TV. The other company they acquired is Vibe. That was more recent. That was just like a couple weeks ago. And Vibe is an advertising technology company that focuses on helping small businesses buy ads on TV. So again, that's another sort of play at streaming. And this sort of honestly, Walmart is kind of following in Amazon's footsteps with their ad business. And Amazon has also, in recent years, kind of diversified more into other types of advertising that aren't just ads on their site, but ads on Prime Video. Amazon also has a big ad tech business where it helps connect advertisers to all different types of media, including websites and other streaming properties like Netflix and Roku. So, just looking for other places to sell ads.
That makes a lot of sense. Let's talk a little bit more about Amazon. It seems like we're comparing a lot of Walmart versus Amazon. Like, why is Amazon the right company to sort of benchmark Walmart against, and how are they differing right now?
I think, they're definitely rivals. I mean, they're the 2 biggest retailers, like, in the country, maybe the world. I don't know. I don't know about the world. I'd have to fact check that. Um, they're both really, big retail businesses. Obviously, Walmart, older physical retail. But, Walmart has often, like, kind of been catching up in the e-commerce space and kind of following Amazon's lead in a lot of ways. I mentioned with the third party sellers, they kind of, did that, after Amazon sort of pioneered it. Um, and, I think advertising, I think they're the right comparison because Amazon kind of almost created the category of retail media or selling ads on digital websites. There's been sort of, when you go to the supermarket, you might see little promotions, and that's technically advertising. Like, if you're on the shelf and they're saying like, buy Ocean Spray 2 for 1. That is advertising, but the opportunity for it to scale isn't the same as with digital, especially because you can kind of track users across the web. And the reason why it's such an attractive category for marketers is because marketers have been increasingly fixated on measurement. How do we know our ads actually drove sales? And a really good way to know is if you can have the shopper data. So if that the person who looked at the ad bought the product, that's a pretty good way to measure the effectiveness of the ad. I think people in the ad industry sometimes, debate as to whether these ads are actually the most effective in some ways because you're kind of capturing people already in market for a product when they're on the e-commerce site versus TV ads, while harder to measure, might help, someone who's never thought about your product start considering it. But it's definitely a fast-growing area of the ad market.
But for TV ads, it's harder to get this kind of quantitative feedback, like the click-through rate from people clicking on your ad on a website or something like that.
Exactly. You don't know. Yeah, it's hard to know who looked at it, hard to then follow them to purchase. People might see the ad and then buy something months later, maybe because they saw it, those subliminal messages, but it's hard to measure it, and advertisers like to be able to buy what they can measure.
Yeah, absolutely. It would be really nice to have a randomized control trial, a whole study where you can just measure it. But I guess we don't have that in the real world. So are retailers the new top sellers in the advertising world?
Yeah, I mean, they're really starting to be, Martin Peers, my colleague and editor, um, did a Sunday Insights a couple weeks ago, kind of showing that of the top 10 ad sellers, like, I think 4 of them were retailers, some of them were Chinese-based, and yeah, again, that's because of this trend, of advertisers wanting to be able to track the effectiveness of their ad spend. Another thing kind of, that, uh accelerated that trend was Apple, I guess at this point, like 5 years ago, made it much harder to track, people on iPhones and whether those ads worked, and that sort of dampened the effectiveness of a lot of different types of digital advertising. So if you don't have the data of, like, following people on their phones, the retail data is a good proxy. So, yeah, retailers are becoming more important, probably at the expense of traditional entertainment companies, media companies, news outlets, etcetera. So sad for them, but, um
So Walmart is growing faster than Amazon in terms of their ad businesses.
Mhm.
How does Amazon respond to that? Is it making moves to hold on to that lead that it has?
Yeah, I mean, Amazon's still a much bigger business. Amazon was like a $68 billion business last year. That's compared to Walmart being about $6 billion. So much bigger, been in the ad business longer. Amazon has been sort of diversifying the kind of places it sells ads. So, again, I mentioned the ads on Prime Video. I mean, Walmart doesn't have like a popular streaming service like Prime Video to sell ads on. They have Vizio where their ads on TVs, but that's probably not as much, like, people aren't looking at the home screen of their TV as much as they're, like, watching a TV show. So Prime Video, definitely an important, surface for them. Also, Amazon has been really investing recently in having, like, very competitive advertising technology and sort of taking the place that Google once had, and still has in a lot of ways, as, like, the dominant sort of internet ad broker. Amazon has been really investing in that in recent years. And then, Amazon has, like, so many other kind of businesses that we might not think about as much, but Twitch, Audible, Alexa, they have their Wondery podcast network. These are all places that, they sell ads on as well. They're not necessarily, we actually got into this issue in an article I wrote like a month ago. Those places aren't necessarily as popular services for advertising as like Prime Video and, and, Amazon's website, but they still, like, they're very, like, diversified. So, I don't know if Amazon needs to so much, like, worry about Walmart quite yet. I guess, I mean, the one thing that Walmart has is the physical stores, and that's been something that they have been, not as big in, and they've kind of stumbled in a bit. They do have Whole Foods, and they have some other physical kind of properties, but, and, Walmart can use that data. But, I think Amazon has a pretty good lead for now.
Yeah, the ad brokerage side is interesting. I definitely have a pet interest in those kinds of ad exchanges and the auction structure, but we'll have to get into that another time. The last question I have to ask you, you wrote that one former Amazon retail executive compared advertising to heroin. This is very provocative. So what did they mean by that?
I'm sure, as you imagine, Amazon PR loved that. But, so, I mean, basically, the idea is it's like something you can get hooked on. I mean, we've reported, that Amazon's, when Amazon kind of calculates the profitability of its stores business, it often includes advertising. Walmart similarly has said that advertising and also membership, so sort of its kind of equivalent to Prime, has driven a lot of its profits. So there's a risk that, like, you kind of ignore the profitability of your main retail business, which is low margin because the growth you can get from advertising. That's one thing. But also, I mean, advertising is just a great way to make money, but you can annoy consumers. I think people complain about seeing ads on Amazon a lot and probably on Walmart too. And then you can also annoy merchants. There's a whole antitrust case built partially on the fact that advertising is kind of a tax on merchants on Amazon, where they feel like they can't be seen at all unless they pay for ads, which
Mm.
the government is arguing is unfair. So, and long term could annoy merchants from selling on Walmart, especially when they're not the dominant e-commerce platform. So, I guess you have to be careful to not over, put your pedal on the gas or yeah.
Yeah, that adds some fun controversy to the whole thing. Well, thanks for coming on and explaining it to us, Catherine.
Thank you so much.
Concerns about the risks from AI models are top of mind in the AI industry right now, since the cyber capabilities of its AI models landed Anthropic in hot water with the White House recently. A new report out today ranks major AI companies in terms of their AI safety practices. Joining us to discuss its findings is Max Tegmark, an MIT professor and chair of the Future of Life Institute, which is the AI safety organization behind the report. All right, welcome on the show, Max.
Thank you so much. It's a pleasure to be here.
Well, one of the headline takeaways for me is that no one is doing very good in this report. I mean, Anthropic did the best out of everyone and it got a C plus. So the situation is not looking good. Can you explain that to us?
Yeah, maybe not the kind of report card that kids are happy to bring home to mom and dad, but it's not particularly surprising. The saying, show me the incentives and I'll show you the outcome. You know, right now, AI is the only industry in the US that's less regulated than sandwiches. So if companies aren't incentivized to have safety standards and so on, then they get into this sort of race to the bottom, which I think is reflected in the grades.
I see. And that incentive comes from just the push to develop the business and cut corners in terms of these guardrails?
Yeah, this is nothing new for AI. We saw the same thing in pharmaceuticals. Back before there was an FDA, there was a company that sold this soothing syrup for babies to make them sleep better at night. It had such high amounts of opioids in it that many babies never woke up again. And it was anger about things like this that ultimately gave us the FDA. But now in pharma, we instead have a race to the top, right? Where companies apply a lot of talent and funding to make sure to race to see who can be the first to make a safe product.
The FDA analogy is an interesting one. I don't know if you saw, but Howard Lutnick recently said that there will be no FDA for AI. What did you make of that? It feels very telling then.
Well, there's been a massive pivot from the White House in the last few months, actually, because before then, pretty much everyone in the White House was saying no regulation, no regulation, no regulation. And then some folks in the White House started saying, actually, maybe there will be an FDA for AI. And right now, they're sort of duking it out. I think what changed was Mythos, which came in as a massive wake-up call. If a company is basically selling offensive cyber weapons, then a lot of people in the national security community went like, wait a second, maybe we should be informed of this. Maybe we should even have a say. Imagine if some company started to sell bioweapons in supermarkets or nuclear weapons, right? Of course, the government would want to have a say in this. And sure enough, the government came in and blocked Mythos and Fable 5 and still have a block on ChatGPT 5.2.
Yeah, well, I'd love to get into that and also what you see as some of the solutions there. But first, let's dig into the results from the report a little bit more. So, you separate this report card into 6 categories, and I want to zoom in on a couple of them. One of those categories is information sharing. Anthropic got a B plus, Meta got a D plus. I was a little surprised that some of the scores were so poor because I think of information sharing as the place where we have the most AI policy at this point. We have state laws in California, New York, as of yesterday, in Illinois as well, that require some at least minimum thresholds for transparency and information sharing. So, why isn't that enough for everyone to be getting an A in this category?
Well, first of all, the Illinois law only came into force yesterday, right? So it's hasn't incentivized the companies, until now. I hope we'll see strong improvements, but there's still a lot of companies who basically share information to the point of saying our stuff is totally safe. Trust us. It's sort of if you go to the supermarket and buy a product and it says healthy on it, but there's no ingredients listed, and some companies have done a lot more than others. Anthropic came out on top there because they have actually published a lot of stuff which, to some extent, incriminates their own products, right? They've released work showing that their own AI system can, in some controlled experiments, blackmail the guy who's trying to turn them off, or and threaten to leak his extramarital affair unless he promises to not turn it off. So, stuff like that. So bonus points for companies who've done this. But you see, there's a vast range, right? Down at the bottom of the list, we have 3 companies, one from China, one from Europe, one from America, who have shared almost nothing about their safety practices. So a lot of room for improvement there.
Definitely. The other category that caught my eye because of room for improvement is existential safety. So I'm hoping you can explain to us what you mean by that. But basically, everyone bombed. Most companies got an F. Anthropic and OpenAI got a D plus. This is a big topic for you, I think. So why are they falling short?
Yeah, this is an interesting one. The top CEOs, Elon Musk, Sam Altman, Demis Hassabis, Dario Amodei, all signed a statement about 3 years ago saying that AI could cause human extinction. And the reason they said this, of course, is because what they're trying to build is not just a better chatbot. They're ultimately trying to build what's called superintelligence. So if you imagine robots in the future, they're vastly smarter than us, more nimble than us, and also stronger than us, and can do everything we can do just vastly better, then we shouldn't think of it as just a new technology like air conditioners or electricity or the internet. It's like a new species, because those super smart robots roaming around Earth doing stuff, they can build new robots, they can make copies of themselves, they can reproduce. And it's been known since the origin of the whole field with Alan Turing that it tends to be the smarter species that dominates the planet, right? If you go down to the zoo and ask who's in the cages, is it the animals or the humans? The reason it's not the humans is because the smarter species tends to be in charge. So the reviewers of this report basically found it kind of jarring that the same people who are saying this could cause human extinction and are trying to build the superintelligence didn't actually provide any plan for how they're going to keep humans in charge of this tech. And this has become more urgent recently because, 5, 6 years ago, AI couldn't even talk properly, right? But now that we already have, since then, we've gone from AI that was kind of high school level to kind of college level to PhD level to professor level to beyond in some areas. And we have Dario Amodei from Anthropic talking about a country of geniuses in a data center, next year. These very well understood risks that if you build a new species, you got to be careful, have shifted from being some kind of far future thing for our grandkids to worry about to something we need to worry about this decade.
In terms of the report, though, is there anything these companies could have done to get an A? Like, what would it look like for companies to do well in this category, according to you?
Well, to add some optimism here, the easy fix is, I think, to start by just treating the AI industry like any other industry. if you treated it like sandwich shops, for example, they just can't sell any sandwich until the local food inspector has checked for rats in the kitchen and stuff like that, right? So, and if you look at pharma, right, if we never lie awake worrying that someone is going to release a new medicine that has as a side effect that it causes heart attacks in half the people who take it, because we know they can't even launch it until they've demonstrated the safety of the medicine, right? So if we had anything like that for AI, like you mentioned, an FDA for AI, well, what happened then is it would be still very easy probably to get approval for the cancer curing AI and all sorts of wonderful productivity boosting AIs. But they would probably get rejected, companies, when they try to release an AI girlfriend for 11-year-olds or something where they can't demonstrate convincingly that it won't teach terrorists how to make bioweapons. And can you imagine someone coming in and saying, "Hey, I have this super intelligence I'm going to release. I don't know if it's going to overthrow the U.S. government or not." Obviously, the government review panel would be like, okay, you haven't passed your clinical trial. Come back when you have a better case. Next customer, please." Bing. So what we would get then is basically a golden age of AI, where we continue to see massive innovation, and all the things that the governments can demonstrate have more benefits than harms, from curing cancer to amazing revolutions in autonomous vehicles and this and that, and so much of what people are excited about, right? And then this sort of freaky stuff, you all out human replacement, would just have to go to the back of the queue until companies maybe in 10 years or 20 years can have some better ideas for how to make that safe. But the key point is the vast majority of what pretty much everyone I talk to is excited about using AI for, right, does not require some sort of weird sci-fi super intelligence. It requires controllable tools.
I see. So it sounds like to do better on the report card, the companies would have to do a significant change in their strategy, or at least their sort of long-term goals for the models that they're developing.
I think many of the goals they can keep. It's just the super intelligence business that I think they would be forced by any meaningful safety standards to chill out on a little bit. Right now, if you're building any other product, if you're building selling a teddy bear, or you don't make it also have all sorts of unwanted functionality, like if you press this ear too hard, it explodes or something. You just make it have the functionality the customer needs. Whereas with AI, we tend to do the opposite, right? Even if it's an AI that actually operates in a teddy bear and talks with a kid, there was
Which
one
is
like
happening.
that.
It's happening more and more, yeah.
They put all of ChatGPT in it that has all human knowledge and starts telling your baby about S&M and so on, right? So as soon as there is any kind of incentive to meet some safety standards, what companies will do instead is make narrower AIs that do just the tasks that the user wants for different products. So, for example, there's no need reason why you and I, when we just use AI to help us with some of our own work, need to have any capabilities of that AI for making bioweapons. You can have a separate AI that's used by expert biologists working in biosafety level 4 labs, but we shouldn't have all these dangerous tech powers in everything. It's just like if you go to a janitor in the Pentagon and ask what are the nuclear codes, he or she isn't going to tell you, right?
I hope not.
Even if you're very mean to them and torture them, they won't tell you because they don't know. And there's simply no reason for every single AI system to have all of this knowledge in it.
Yeah, this point about specialization is interesting because I think it's one reason that people are preferring open source models these days, just the degree of customization that you can get out of them. But I noticed that on the report, open source models and the companies developing them actually didn't fare as well. I'm curious, is that because they're working on open source models? My sense was like DeepSeek, for example, is lagging behind. Mistral did pretty poorly.
Yeah, not sort of indirectly. They did get some credit, the open source companies, for information sharing, because of course sharing that makes it easier for other people to study them and understand how safe they are and so on. DeepSeek scored really low because, frankly, neither DeepSeek nor Mistral nor XAI had really presented much evidence at all that they were really putting even working much on safety during this last half year. ZAI from China, that's behind GLM 5.2, scored higher because they have released more in the way of their safety strategy and so on. And you could totally imagine open source systems which are great for translating between English and Japanese, or great for all sorts of very productivity boosting things that will no matter how much you tweak them, never teach you how to make a bioweapon because they just weren't trained on that knowledge.
Yeah. That makes a lot of sense. The only company, in fact, in the report that improved its score since the last time you did the report was Meta. It went from a D to a glorious D plus. What happened there? How did they improve their score?
It did jump from 6th place to 4th place also in just 6 months, though. So hats off to Meta. You should, of course, ask Mark Zuckerberg and others what the ultimate reason behind this is. But our panel felt that it was really clear that they had made a corporate decision to just try much harder on safety. They've been producing safety framework, and they've clearly put a lot of people on their staff into thinking about these issues. And I think this is an encouraging data point for the rest of the industry. If it's possible for Meta to improve so much in just 6 months, so can everyone else.
Yeah. Are there any particular people on the staff that you would point to that you think are pushing them in that direction?
Well, I don't want to. I know a lot of people at Meta. I don't want to sit here and and gossip about individual people.
Sure, that's a different report card.
But I that's one maybe over beer in private. But
all right, well, that sounds great to me. I look forward to that.
Yeah, but it's quite interesting to see how fluid the situation is, and I think we've. What's also really, really fluid is the political situation in the U.S. because I've been quite active, not just with my technical research at MIT on AI, but on these policy issues for well over a decade now. And I've never seen such a big political change as I have in the last 3 months in the U.S., where the administration, I think, basically had a wake-up call because of mythos. And as a result, is now talking very openly about having some safety standards and so on. And the EU AI Act, comes into force next month. China went ahead last fall and required all AI content to be labeled as such, and also really cracked down hard on AI girlfriends and anthropomorphic AI. So I think we're now approaching a situation where there is a minimum safety bar that there's actually unanimity for all around the planet. And I think that might, in the next 6 months, translate into some really nice incentives for the companies around the world to start racing to the top rather
Yeah.
than
Yeah. I guess sometimes I hear this argument in the US that's like, even if you got your favorite policy position and you could just fiat it into existence, you create the FDA for AI or what have you, and you have some kind of licensing regime, it won't matter because 6 months from now, the open source models will have caught up and everyone will have access to mythos level cyber capabilities. So what's the point of licensing? What do you make of this argument?
Yeah, I don't buy that. I think it's mostly a talking point for some Silicon Valley lobbyists who want to avoid regulation at all costs. First of all, China has an has an FDA for medicine, right? Why do they have that? Not to suck up to the US, but to protect Chinese. And then the Chinese FDA people and the American FDA people and the European ones, they like to get together and harmonize things to make it easier for companies that meet the standards in one country to now get to sell in the other, right? And I think the same thing is happening with AI also. Why did China crack down on AI girlfriends? Obviously, because AI girlfriends were really wreaking havoc on Chinese kids, right? And do we really believe that the CCP is excited about getting the Chinese government hacked with Chinese open source cyber weapons? Of course not. If anything, the CCP might be even more concerned about loss of control than Western governments are, right? So they have their very own incentive to keep the Chinese companies in check. And I actually suspect that the Chinese government knows more about what the Chinese companies are up to than the American government has insight into its companies right now. So I think it's going to start locally. Each country will do stuff, introduce safety standards for egoistic reasons. But then again, once they have that, there's a lot of incentives for them to talk to each other, right? Both to share best practices and also to make it easier for companies to cross-market products.
Well, it's going to be an interesting 6 months then, for sure. So thanks for coming on, Max, and telling us about the report.
Thank you for having me on.
Absolutely. Well, that does it for today's show. As a reminder, we're on this stream Monday through Friday at 10 a.m. Pacific or 1 p.m. Eastern. And if you can't make it then, episodes are available on theinformation.com or our YouTube channel or wherever you get your podcasts. Make sure to follow us on social media on X, Instagram, and even TikTok. And I'm already excited for our next show, so have a great rest of your Tuesday and goodbye for now.